important changes to the income tax laws in the United Kingdom, which will come into effect on April 6, 2025. These changes aim to adjust the country's financial policies and address public spending, and they will have a direct impact on taxpayers. 1. Freezing the personal allowance. The first major change to be aware of is the freezing of the personal allowance. The personal allowance is the amount of income you can earn without paying taxes, and it will remain fixed at £12,570 until April 2028. This means that as your income increases, you will be pushed into higher tax brackets without an increase in the personal allowance, which leads to what is called fiscal drag. In simpler terms, more people will fall under the tax net as their income increases, but without any adjustment in the threshold. This can increase the tax burden on middle-income earners. 2. Income tax rates now. Let's look at the income tax rates. There are 3 main income tax bands. Basic rate, for income up to £37,700. Higher rate, for income between £37,701 and £125,140. Additional rate, for income over £125,140. This structure means that, as your income grows, you will pay progressively higher rates on the additional income earned in each bracket. These rates will impact salaried individuals and business owners alike. 3. National insurance changes. Another significant change comes in the form of national insurance. The rate for employers' national insurance will increase from 13.8% to 15%. Along with this, the threshold for national insurance payments will also be reduced from £9,100 to £5,000. This means more people will be required to contribute to national insurance, especially smaller businesses and self-employed individuals, putting additional financial pressure on them. 4. End of non-dom tax status. The UK government will also be eliminating the non-dom tax status. In simple terms, this means that individuals who have lived in the UK for a long time will now have to pay taxes on their global income. Previously, non-doms were able to exclude foreign income from being taxed in the UK under certain conditions. This change will affect high-net-worth individuals, especially those with international business interests. 5. Penalties for late tax payments in the past. Penalties for late tax payments were relatively lenient. However, under the new rules, late payment penalties will become more stringent. The penalty system will work as follows. A 3% penalty will be applied if payment is late by 15 days. A further 3% penalty will be added if payment is late by 30 days. If payment is late by 31 days or more, the penalty can be as high as 10% annually. These measures are designed to encourage timely tax payments and reduce the burden on the government's revenue collection process. 6. Stamp duty removal for first-time buyers for those looking to purchase their first home. The stamp duty exemption will be removed. Previously, first-time buyers were exempt from paying stamp duty up to a certain price limit, but this will no longer be the case. The new regulations, even first-time buyers will have to pay stamp duty, which will increase the cost of buying a home. 7. Capital gains tax rate increase finally. Another important change is related to capital gains tax. Previously, individuals could sell business assets at a 10% CGT rate. But under the new laws, this rate will be increased to 14%. This change will particularly affect those involved in asset management, business owners, and investors who wish to sell their businesses or other high-value assets. To conclude, the UK's new income tax laws, effective from April 2025, are set to make significant changes to the taxation system. From freezing personal allowance limits to imposing higher penalties for late payments and increasing capital gains tax, these reforms are designed to help the government balance its financial situation while ensuring that more people contribute to the tax system. For individuals and businesses, it is essential to understand these changes and adapt accordingly. The goal is to manage finances wisely and stay ahead of these upcoming changes to avoid any unexpected financial burdens.